Now let's check out activities at the FMDQ exchange with Chuka Nwachukwu, is the head asset and liability management UBA. Good to have you, Chuka. But Chuka, it's midway into the first month of the year. Participants in the financial markets are already setting the scene for the financial year. The first NTB auction for the year took place last week. Now the expectations of market participants was for a general decline in rates across all maturities. Now we saw this reflected in the bids submitted at the auction. However, there was a twist to the market as the CBN announced an OMO auction with mind-blowing interest rates as well. Now the variance between the results were poles apart. You can see that on the screen there, likened to chalk and cheese by some analysts. Now the body language of both parties show that they have differing positions with regards to interest rates, while the DMO is obviously enjoying the lower interest rate environment, which somehow reduces the cost of debt for the federal government. Now the CBN appears to favor a more hawkish stance in a bid to attract foreign portfolio investors and boost the liquidity in the FX markets. But Chuka, can you tell us how much impact this is having on players in the financial market who are always at the receiving end of these financial contradictions?
Thank you, Will, and Happy New Year. Like you rightly mentioned, there was an OMO auction on Monday. 350 billion was offered and sold. So we saw, in terms of comparison in price, we saw 25 basis points drop from last week's auction. The 1 year came out at, last week came out at 17.75. Monday came out at 17.5. That's a 25 basis point drop in yield. You know, the comparison between treasury bills and NTB and OMO is they both have different purpose. For T-bills, which is for NTB, which is offered by DMO, DMO's primary aim is to ensure that the government borrow as low as possible. So as long as the yield is low, it favors it favors government, and so they want to borrow as low as possible. For OMO, CBN obviously is looking to mop up excess liquidity in the system and also attract foreign investors. So it makes more sense for the yield to print out that very high, and so they both achieve a different purpose. For the rest of the week, especially going into the secondary market, we've seen this OMO that came out at 17.5, trading around 11%, and that shows you the interest there are, in these securities. Another point again we need to look out for is liquidity. What liquidity is doing in the market. The liquidity has greatly, affected the, activity in the market. On Monday, for example, system liquidity opened around 250 billion, positive, and about Thursday, by Wednesday, we saw the system liquidity drop as low in negative about 25 billion. That also has to do with the settlement that took place as regard the OMO auction on Monday. So liquidity has really played a key role in terms of driving the activities in the fixed income market.
Okay, so you're talking about liquidity and talking about how that is impacting the economy, especially with the rising prices. December inflation numbers printed higher than expected at 28.92% against the 28.7% forecast by some analysts. But what are your expectations for interest rates, especially when the CBN gets around to holding the first MPC meeting this year?
Well, the inflation for December 2023, the last month, printed at about 72 basis point, upward increase from 28.2 to 28.92. Of course, the uncertainty as regard the MPC not meeting is also playing its own role. And that obviously has affected some of the activities, especially as regard the foreign investors, because everybody wants to know what direction the government is looking to go. So what is expected if MPC holds, is expected that, if you watch some of the communique before, with the last MPC, the CBN then, although under a different administration, has repeatedly, increased interest rate in order to fight inflation. And so, if you look at the inflation figure at 28.92, and then you see where 1 year, even the OMO is trading at 17.5. You see that already investors are under the water, especially as regards the fixed income investment. So I expect that when MPC sits, most of their decision has to take into consideration, the inflation, what's happening on the inflation end. And, also, if you look at some of the factors that influences this inflation, you can see that the major thing there is food inflation, of course, the exchange rate inflation, as well as commodity inflation. So on the food inflation, for example, there are fundamentals. For government to tackle that, you have to look at both physical and then monetary. You can't just tackle it only on monetary aspect of it. And government has to come in terms of security. A lot of farmers, produce. Some of them can go to the farm, some can produce, but doesn't get to the end user. So you now have you have little, you have huge demand of some of these products with little supply. Of course, price will go up. And then, of course, the petroleum subsidy, high cost of transportation, high cost of goods and services, because of the removal of petroleum subsidy. So all these are factors that are affecting inflation. And I believe that CBN is equally looking at this, and that is why on the monetary aspect of it, they continue to mop up excess liquidity in the system using some of the monetary tools like CRL and then OMO.
Interesting analysis there, especially for food inflation, which is continuously driving consumer prices up. But what are we looking at in terms of how is this affecting? We see that the equities market is definitely trying to, give investors a return for their money, for their investments. But we're wondering how the fixed income market is doing, because a lot of people moving to the equities market. Can you tell us some of the stocks? Some of the instruments in the fixed income market that investors, market players are leaning towards at intraday? Is there anything interesting going on for them there?
Yeah, the fixed income market is primarily the treasury bills and bonds, and obviously these are the most secured investments you have out there. Though the inflation is eating into some of this investment, but I think that investors will look with hope. If you look at look at government budget, for example, well over 11 trillion, in deficit, and so this deficit will be, they try to cover this deficit through investment in the fixed income market, the treasury bills and bonds, and so I believe that the yield, though we have a low yield presently, but investors should look out for, hopefully before the end of first quarter, second quarter, you see high yield, maybe around the region of, for bond, for example, the longer end, which is 2053, you probably see around between 16 to 17 levels again. For T-bills, you probably see within that 14.5, 15 level for NTB. Okay. So I believe that as long as government is looking to borrow more, they will be forced to come into the fixed income markets. Okay. And then, of course, they need to make the use attractive for investors to be able to play in. And so I still believe that the fixed income market is one of the most lucrative markets you can invest in presently.
Thank you so much, Chuka Nwachukwu, Head Asset and Liability Management, UBA, for sharing your perspective.